Okay. Okay. Question number 2. Test your knowledge. I'm discussing the question. Okay. Pay attention. Miss Rakhi is an employee in a private company. She receives the following medical benefits from the company during the previous year 25-26, and these benefits are given 1, 2, 3, 4, 5, 6. They are asking you examine the taxability of above benefits and allowances in the hands of Rakhi. You just have to tell that whether it is taxable or not. If yes, then why? If no, then why not? Okay. Next one. See. Reimbursement of following medical expenses incurred by Ms. Rakhi. Employer is reimbursing these expenses. So number 1, on treatment of her self-employed daughter in a private clinic. See, daughter is self-employed. Daughter means children. Children may or may not be dependent. So if the daughter is dependent, then also not dependent, then also any medical facility received for my children will be exempt, provided the treatment is done in government hospital, recognized hospital or employer's hospital. But the treatment was done in, hence this benefit will not be exempt, this will be taxable. T for taxable. Okay. Next one, on treatment of herself by family doctor. See, even if for this treatment also, the treatment would have been done in government hospital, recognized hospital or employer hospital, then this benefit would have been exempt. But this will not be exempt because the treatment is done by family doctor. So this will also be taxable. So the reason for taxability is, since the treatment is done in private clinic, the benefit will be taxable. Second one, since the treatment is done by family doctor, the benefit will be taxable. Next one, on treatment of our mother-in-law. Mother-in-law is not a specified patient. The treatment should be done for self, spouse, children, dependent brother, dependent sister and dependent parents. But she is not the parent of Rakhi. Yes or no? And the treatment is also done in a nursing home. And they have not mentioned that what type of nursing home this is. So this will be taxable. Yes or no? Now payment of premium on Mediclaim policy taken on her health. So your Mediclaim premium the employer is paying. So this will be a benefit, but this benefit will be fully exempt for yourself, for your children, for your spouse, for your dependent brother, sister and parents. If the medical premium is also paid by the employer, this will be fully exempt. So the premium is paid on her health, means Mediclaim policy is taken for Rakhi employee. Yes or no? Next one, medical allowance. That will be fully taxable. Yes or no? Now medical expenses reimbursed on her son's treatment this will be fully exempt because the treatment is happening for son and the treatment is happening in a government hospital. Hence this will be fully exempt. Expenses incurred by company on treatment of her minor son, and the treatment is happening outside India, including stay expenses. So this 1,05,000 is the total expenditure incurred on treatment and stay abroad. Yes or no? And this will be exempt to the extent of limit prescribed by RBI. So RBI has prescribed how much limit? Note, limit prescribed by RBI for expenditure on medical treatment and stay abroad is $250,000 per financial year under liberalized remittance scheme. Meaning the RBI's limit for this particular expenses is $250,000. If you convert it into INR, no, the amount will be very huge, and that will be covered. 1,05,000 will be covered by that limit, no. So the entire expenditure for stay as well as treatment is within the limit of not 2,50,000. 2,50,000 converted into INR. Okay, but the rate etc. they have not given, so we will not be able to convert it. But definitely the limit will be higher than 1,05,000. So this entire 1,05,000 will be exempt. Yes or no? So now see, how much will be taxable? 4,000, 8,000, 5,000 and 2,000 per month into 12, meaning 24,000. This will be taxable, and 5,000 will be exempt, and this 7,500 will be exempt, and 1,05,000 will be exempt. So this is the taxability, and we have already discussed the reasons why the amount is taxable and why the amount is exempt. Yes or no? Question number 1 is done. Question number 2 is done. Question number 3 is also done. Now let's come to the question number 4. I hope you have solved this question. Okay. Now let's discuss this question. Mr. Balaji employed as a production manager in Beta Limited, meaning that he is a non-government employee. Okay. Furnishes you the following information for the financial year ended 31st March 2026. Basic salary up to 31st October is 50,000 per month, meaning for 7 months. Or into 7. How much will be the amount? This basic salary up to October will be taxable, and from November to March for 5 months it is 60,000. So the amount is, this 3 lakh will also be taxable. So total basic taxable will be 6,50,000. Salary is due and paid in the, very lucky, because the salary for this year, entire salary getting due in this year. So taxable in this year. If they would have told you that the salary becomes due on the first day of the next month, meaning that this month's March will become due in the next year, so it will be taxable in the next year. So instead of multiplying by 5, you would have multiplied by 4. Yes or no? And there, instead of multiplying by 7, you should have multiplied by 8, because last year's March would have been taxed in this year. Yes or no? But we are very lucky that the salary becomes due on the last day of every month. So this year's salary, entire salary, starting from April to March, becoming due in this year, so taxable in this year. Now dearness allowance is 40% of basic salary. So first of all, we'll take 6,50,000 into 40% will be 2,60,000 will be taxable. Now they are not telling you that DA is in terms or not in terms. We'll check ahead. Okay, no? Bonus equal to 1 month salary paid in October 25 on basic salary plus dearness allowance applicable for that month. So what was the salary for October? 50,000. 40% of that, so 20,000 will be DA. So 50,000 basic plus 20,000 DA. 70,000 will be the salary for the month of October, including DA. Yes or no? That amount is given as bonus also. So what will be the bonus amount? 70,000. Even that bonus will be taxable. Yes or no? Next one. Contribution of employer to RPF. How much? 16%. So what we are going to do here? Come on, tell me. No. First we will calculate 16% of basic salary. So how much is basic? 6,50,000. 6,50,000 into 16%. So we are going to do 16% of 6,50,000. That is going to give me how much? 1,04,000. This is the actual amount contributed by the employer. Out of this, how much will be exempt? Actual amount contributed 1,04,000 or 12% of salary, whichever is lower. Yesterday only I did this working. Yes or no? So we are supposed to calculate what? 12%. 12% of what? Salary. And for this salary, we would require what? Basic, DA in terms and turnover commission. In the question, turnover commission is not given. So it will be nil. Basic is there, 6,50,000. So we are going to take 12% of basic is 6,50,000. Now DA, they have not told you that DA is in terms or not in terms. So you will have to take an assumption. Okay. Now wait, there is no other hint also in the question that whether the basic is, whether the DA is in terms or not in terms. So you can assume in either way. You can assume not in terms also, you can assume in terms also. In the solution, I guess they have assumed not in terms. Please check in the solution. What they have assumed? Does not form part of, meaning that they have assumed that DA is not in terms, does not form part of salary for retirement benefits, means DA is not in terms, what they have assumed. So we are also going to assume that DA is not in terms. But even if you assume that the DA is in terms, then also your answer will be correct only. Understanding what I am trying to tell you? So tell me, what we should assume? What do you want me to take the assumption? Not in terms. So DA, we will assume that it is not in terms. So we are going to take nil here, because here we are supposed to take DA in terms. Yes or no? How much was the turnover commission? Nil. So fortunately your salary also comes to 6,50,000. Okay. So 12% of this will be 78,000 or 1,04,000, whichever is lower. 78,000 will be exempt. So how much is the excess contribution? 26,000 is the excess contribution that will be taxable. Yes or no? Now professional tax paid 2,500, of which 2,000 was paid by the employer. First effect, 2,000 which is paid by the employer will be taxable as salary. Taxable as perquisite. 17 subsection 2 clause 4. Professional tax was your obligation. It was met by employer, meaning that it is a perquisite and it will be taxable for you. And later on for this 2,000 you are going to get the deduction also. But wait, additionally 500 extra professional tax you are paying. So you are paying total professional tax of. So whenever you are going to take the deduction will be available for 2,500. Yes or no? So 2,500 will be allowed as a deduction. Next one, facility of laptop and computer was provided to Balaji for both official and personal use. Cost of laptop 45,000 and computer 35,000 were acquired by the company on 1st December 2025. Meaning that this computer and laptop is sold to you, or given for use. Whenever the employer gives you computer or laptop for using, the benefit arising is personal as well as official. But it is very difficult to determine how much is personal and how much is official. Hence the benefit by using the laptop and computer is fully exempt perquisite. So how much will be the taxable amount here? Nil. So the cost of laptop given, cost of computer given will be irrelevant. But instead of this, if the if any other movable asset was given for use, then we would have taken 10% per annum of the actual cost of that asset. Yes or no? But that we cannot do here. Why? Even if the actual cost is given, we are not going to take 10% of that, because this benefit is fully exempt. Yes or no? Hello sir. Did you understand this? Sure everyone? Okay. Now motor car owned by the... So I am giving you my motor car. Are you going to use that motor car? So benefit from using the motor car will arise. Benefit from using my motor car will arise. Yes or no? Now the cubic capacity exceeds 1.6 liter means 1600 cc. Sometimes they use this terminology. 1600 cc they will represent by 1.6 liter. 1200 cc they will say 1.2 liter cubic capacity. Cubic capacity means what? Cc. Understanding? So 1.6 liter. 1 liter has how many? Milliliters. 1000. So if you multiply that by 1000, you will get 1600. Getting my point? So exceeds what? 1.6 liters, meaning what? More than 1600 cc. Yes or no? Now provided to the employee from, meant for both official and personal use. Yes or no? and repair and running expenses of 45,000 from 1st November to 31st March were fully met by. Now looking at this, I come to know that the car is given for use. So use benefit will arise. Expenses are also met by employer. So expense benefit is also arising. One benefit or two benefit? Two benefits. Use as well as expense. Two benefits are arising. Both the benefits will be fully exempt if the car is used only for official purpose. Both the benefits will be fully taxable if the car is used only for, but this car is used for partly official, partly personal, meaning that I don't have to calculate both the benefits now. A flat amount will be taxable. If you remember, 1800 per month plus 900 for driver also. Yes or no? If the engine capacity is 1600 cc or less. But if the engine capacity is more than, which is given in my question, we will charge 2400 per month, flat amount taxable. Yes or no? And if the driver was also provided by the employer, cost of the driver was also met by the employer, then 900 extra. Yes or no? So tell me, the motor car was self-driven by the employee means driver was provided or was not provided? Cost of driver etc. met by employer or not met by employer? So only 2400 per month will be taxable. No need to add 900. Getting my point? And this will be taxable for the period for which the motor car was provided. It was provided for how many months? 5 months. Starting from November to March. So what we are going to do? 2400 per month into 5 months. How much? 12,000 will be taxable. Yes or no? Now see, leave travel concession meaning LTC given to employee, his wife and 3 children, 1 daughter, age 7 and twin sons. Twin sons will be considered as single child. Why? Because after 1 child, multiple children will be treated as 1 child for LTA exemption. Yes or no? So you can take the exemption for all the 3 children. Now tell me, cost of air tickets. That means the journey was performed by air and economy class reimbursed by the employer. How much? 30,000 for adults and 45,000 for 3 children. Just like this same thing, one question we have solved. Same to same question was there, but the amounts were a little bit different. So how much was the LTA given? 30,000 plus 45,000, 75,000 LTA given. Out of that, LTA will be exempt under section 10 subsection 5. A, B, C, whichever is lower. A, actual LTA, 75. B, actual amount spent. The amount which is given is the amount which you have spent only. So what is the amount spent? 75,000. And maximum limit. If the journey is performed by air, economy class airfare, you remember or not? So economy class airfare only was 75,000, which was spent and which was given to you as LTA. So LTA given 75, amount spent 75, economy class airfare 75, whichever is lower 75. How much will be exempt? 75. How much is received? 75. 75 minus 75? Nil. Nothing will be taxable. But wait, if you follow 115 BAC, then this entire 75,000 will be taxable. Yes or no? And you will not get that deduction also for professional tax. Getting my point? And your standard deduction will become 75,000. So what we are going to do? First we are going to solve this question saying that the assessee is shifting out. It is given in the question. Yes or no? And then the same question we are going to solve by assuming that what if not the assessee is following 115 BAC. That means he is not shifting out. He is following default tax regime. Yes or no? So first of all tell me, have you done everything? Now simple thing you are supposed to do, one by one put everything in the salary statement. Name of the assessee, Balaji. Hello. Individual, ROR. PAN, dash, previous year, 25-26. Assessment year, 26-27. Then computation of what? What they are asking you? Compute the salary income chargeable to tax. So you will write computation of taxable income under the head salary. Particulars rupees and rupees. Number 1, basic salary. Outer column. How much? 6,50,000. On your calculator, take 6,50,000. Basic is taxable, no? Then number 2, dearness allowance. Outer column 2,60,000. Total is, now this is salary or other things are also given. Other things are also given. One by one we are supposed to put those things also in the table. Yes or no? In the format. Now the third thing is bonus. Outer column 70,000. Add 70,000. Yes or no? Then next one, employer's contribution to RPF account in excess of 12% of employee's salary. And the amount is 26,000. Outer column 26,000. Just show a small working. In the working note also you can show that working, or in the format also you can show that working. Yes or no? You want me to present this entire question? Sure, no? Okay. So 26,000 will be taxable. Then professional tax paid by the employer. In the bracket you will write down perquisite as per section 17 subsection 2 clause 4. Employee's obligation met by employer. Bracket close. Yes or no? Outer column 2,000. So add 26,000, then add 2,000. Yes or no? Then facility of laptop and computer given for use. In the bracket you will write down fully exempt perquisite. Outer column nil. Yes or no? Next one, motor car given by employer and the expenses also met by employer. Motor car is used both for official and personal purpose. Yes or no? In the bracket you will write down what? 2,400 per month into 5 months. Outer column 12,000 taxable. Yes or no? Next one, leave travel concession. Inner column. No. Inner column 75,000 less exempt. How did you get 75,000? Bracket you will write down 30,000 plus 45,000. Inner column you are going to write down 75,000 less exempt. Under section 10 subsection 5. Under section 10 subsection 5. A, B, C. Whichever is lower. A, actual LTA 75,000. Amount spent 75,000. Limit C, maximum amount economy class airfare 75,000. Yes or no? Whichever is lower. 75,000 is lower. Write down in the inner column. Inner column 75,000 LTA received. Inner column 75,000 exempt. Outer column nil. Yes or no? So outer column nil. This will be exempt. So on your calculator, how much you are getting? 10 lakh. So I'll write 10,20,000. Everyone got this? Sure, no, guys? 10,20,000. Now from this 10,20,000, are you going to get 50,000 standard deduction? Are you going to get any deduction for entertainment allowance? No. Because entertainment allowance is not received in this year. Yes or no? Even if it was received, it was not allowed as a deduction. Why? Because the government employee is a non-government employee. Yes or no? Will you get any deduction for professional tax? Will you get any deduction for professional tax? Yes, this year professional tax is paid. How much? So that 2,500 you are going to take as a deduction. How much is the balance? 67,000. This is the final taxable salary. Yes or no? If you shift out. If you don't follow 115 BAC, this will be the taxable salary for you. But if we solve the same question, if in the examination they are going to give you the same question and they are telling you that assessee is following 115 BAC, then will it change your basic? On your calculator, take basic. Will it change your DA? Take 2,60,000, add 2,60,000. Will it change your bonus? Add 70. Will it change your employer's contribution in excess of 12%? No. Add 26,000. Will it change this 2,000? No. Add this 2000. Will it change this nil? No. Nil. Then will it change this 12,000? No. Add 12,000. But wait. Here now nil will not come. Now 10 subsection 5 exemption will not be available for LTA. Meaning your entire LTA will be taxable. So now you will add 75,000. So how much you are going to get? 10 lakh 95,000. Instead of 10 lakh 20 you are going to get 10 lakh 95,000. And standard deduction you are going to get no deduction for professional tax if you follow 115 BSE. So how much will be the final amount? This will be your net taxable salary. Everyone got this? So if you follow 115 BSE, this should be your final answer. And if you don't follow 115 BSE, this will be your final answer. Yes or no? But wait, in this entire question we have assumed that DA is not in terms. If we assume DA is in terms, then don't you think this amount will change? How come? Here we'll take 2,60,000. Understanding? So if you would have assumed that DA was provided in terms, then DA in terms was 2,60,000. Yes or no? And 6,50,000. Add 6,50,000 plus 2,60,000. Now your salary will be 9,10,000. 12% of that, 1 lakh. So this amount will change and this will be 1,09,200. And how much the employer is actually contributing? Only 1,04,000, meaning the employer is contributing within the limit of 12%. No excess contribution. So this 26,000 will not come. This will become nil. Understanding or not? Everyone understood? Okay. But in this question we have assumed that DA is not in terms. So our answer is this. Right? Next question. Should I move to the next question? Even this question is very easy question. Mark this question important, but this is easy question. Huh? In this question, no, they have tried to trick you. They have not given you basic salary directly. So basic salary first you will have to calculate the amount because they have given you salary scale, if you can see. Now from the following details find out the salary chargeable to tax, meaning computation of salary income you are supposed to do. Yes or no? Assuming that the exercise of option of shifting out, the assessee is shifting out. Okay, X is a regular employee of Rama and Company in Gurgaon. He was appointed on 1st of January 2025. Guys, 1st of January 25 means what? Wait, huh? First of January 2025, he was appointed, meaning he got the employment in Rama and Company on this date. Can I say this is the date of joining? Hello, this is the date of joining. DOJ. From this date, he will complete 1 year of service. On what date? 31st December 2025. 1 year of service will be completed. Then second year of service will start from 1st January 26 till 31st December 2026. This is the second year of service. And we are not going to go beyond that. Why? Because we have to check our previous year. And our previous year will fall between these 2 years. Yes or no? Can I say my previous year will start from 1st of April 2025, that 1st of April will come in between this first year. Yes or no? And my previous year will end on 31st March 2026, between these 2 dates. Yes or no? So for my previous year, what is the salary? That I have to determine. But for that, are they telling you that at the time of joining, what was his basic salary? No. At the time of joining, what was the basic salary fixed? It is not given in the question, but it is given that he is joining in this scale. He is joining in a grade having a salary scale of 20,000, 1,000 and 30,000. Meaning that minimum salary in this grade is 20,000 and the maximum is 30,000, and every year when he'll complete the 1 year of service, every year he'll get an increment of 1,000 rupees in his monthly salary. Yes or no? So if they are not telling you that how much was the basic salary fixed at the time of joining, we'll assume that he has joined at minimum amount at 20,000. Hello. If I would have been your examiner, what I would have done? I would have told you at the time of joining his basic salary fixed was 24,000 per month. So then you cannot start from 20, you will have to start from 24. But since that information is not given, that at the time of joining how much salary was fixed, we will assume that from the beginning he starts getting 20,000. Second year he will get 21. Third year he will get 22. Fourth year he will get. Likewise, he will get 1,000 increment till 30,000. Yes or no? So tell me, in the first year, how much will be the basic salary? For this year, his basic salary will be 20,000 per month. Nothing is mentioned, so we'll take 20,000. Yes or no? And second year, his basic salary will increase by 1,000. It will be 21,000 per month. Yes or no, sir? So now I have to take basic salary from April to December, which is 20,000. Can I say April to December his basic salary was 20,000 only, no? For how many months? 9 months. So that will be 1,80,000. Understanding? Now, from January, his salary changed. So in my previous year only, in the month of January, his second year of service started. And his salary got increased to 21,000. From 20 it increased to 21. From January in my previous year. Yes or no? And which he was receiving till March in my previous year. Yes or no? So tell me how much? 21,000 into 3 months will give you 63,000. Everyone got this? So what will be the total? 2,43,000. And see, if nothing is given in the question, we have assumed that the salary of each month becomes due on the last day. If the question says that the salary becomes due on the first day of each month, then this year's March will become due in the next year. So you are not going to take 3 months, you are going to take only 2 months. February, yes or no? And you are not going to take 9 months above, you are going to take 10 months, because last year's March, 20,000 will become due in my previous year. Then that will be 10 into 20,000, 2 lakh, and 2 into 21,000, 42,000. Yes or no? 42 plus 2 lakh will give you 2,42,000. Instead of 2,43,000, the amount would have been 2,42,000. 1,000 rupees change will change your entire answer. Yes or no? So don't take these informations lightly. Be very attentive about all these things. If nothing is mentioned in the question, we will assume that the salary for each month becomes due on the last day. Hence the salary, basic salary for my previous year will be 2,43,000. Everyone got this? Sure, sir? So basic salary I have calculated, guys. Basic salary is 2,43,000. Okay. Now he's paid what? 10% DA. 10% is DA. 10% of what? Basic salary. And how much was basic? 10% of that will be. But they have not told you that the DA is in terms or. We'll assume. If some hint is given, we'll check for that hint. But if the hint is not given and they're not clearly saying that DA is in terms or not in terms, then we'll have to definitely put some assumption that we are going to see later on. Okay? But whether I am assuming that DA is in terms or not in terms, DA will always be taxable. So how much DA will be taxable? 24,300. Everyone. Now bonus equivalent to 1 month pay based on the salary of March every year. So how much is the salary for March this year? 21,000. That will be given as a bonus in this year. So can I say I am going to get 21,000 bonus also in this year? So that will also taxable. Now he contributes. He means who? Employee contributes 15% of his pay and DA towards his RPF, towards his, and the company contributes the, meaning they are talking about employees contribution as well as employers contribution. Both are contributing to the RPF. How much contribution? 15% of pay. No. 15% of pay and DA. Now this is a very big hint. Employer is considering DA as a part of salary for contributing to your RPF, which is a retirement benefit. So even if they are not telling you that DA was in terms or not in terms, it is a hint that DA was in terms. DA was written in the contract. Only then the employer will consider that DA as a part of your salary to contribute in provident fund. Yes or no? So in your salary, if DA is also considered and both taken together, 15% of that, if the employer is also considering for contributing in your provident fund, this is a hint that the DA was given in terms. Understanding or not? So we'll take the assumption what DA is given in terms. Yes or no? So first of all, tell me how much is employees contribution? 15% of pay and DA. Will you give any separate effect to that under the head salary? Why? From where the employee will contribute? And salary is taxable only. Entire salary is taxed. From that salary only employee is contributing. So you are not going to give any separate effect for employees contribution under the head salary. But for that you are going to claim deduction under ATC. For that a small note will be sufficient. So in the notes, what are you going to write? Employees contribution to RPF amounting to this. Yes or no? Will be allowed as a deduction under section ATC. That's it. That's it. Now how much employer is contributing? He is also contributing the same amount. So we are supposed to check whether the employer is contributing up to 12% or more than 12%. If the employer is contributing up to 12%, then the amount will be fully exempt. But the employer, if the employer is contributing more than 12%, then the excess amount will be taxable as salary. Yes or no? So first of all, we will check employer's contribution. What are we going to check? Employer's contribution to RPF. How much he is contributing? 15% of pay and DA. Whatever is written there, you are supposed to write down exactly the same thing. Okay. So what was the pay? Pay means basic. Guys, pay means basic. What was the pay? 2,43,000. DA? 24,300. 15% of this amount. 40,095. This is the actual amount contributed by the employer. Okay. How much the employer should contribute? 12% of pay and DA or 12% of salary? Salary includes basic, DA in terms and turnover commission. The salary will not include pay and DA. Salary will include basic, DA in terms, turnover commission. You are very lucky. Turnover commission not given in the question. And you are very lucky that the DA is assumed as in terms. Understanding? If I would have been the examiner, what I would have done? Out of the DA, 50% in terms, 50% not in terms. I would have given the breakup of DA also. And I would have given DA, along with DA, I would have given the turnover commission also. Be very careful now whatever you are writing, because the students commit mistake in this part. Majority of the students will commit mistake in this part. If this is calculated properly, there is nothing in this entire question which can put you in trouble. Yes or no? So tell me, how much is the actual contribution by the employer? 15% of pay and DA, that is 40,095. How much the employer should contribute? Maximum? Maximum 12% of what? Please use this word. Salary. What are you going to use? What word you are going to use? Salary. So now in salary, what are you going to take? 12% of basic, 2,43,000 plus DA in terms. We have assumed that entire DA is in terms. No need to assume. Hint is there. Yes or no? And what is the turnover commission? Nil. So fortunately the amount also comes to that same amount. Pay and DA. And this salary is same. Fortunately. That amount can be different. See, this amount can be different and this amount can also be different. If they are saying pay and DA, so you take pay and DA, all DA you are supposed to take, entire DA you are supposed to take here. But when you calculate 12% of salary, here you are supposed to take only DA in terms. And here you are also supposed to take turnover commission. Yes or no? Now tell me, how much is the amount? 076. Yes or no? Employer should contribute this much. But how much he is actually contributing? Meaning excess contribution is happening? 8019. Excess contribution, that excess contribution will be taxable as your salary. Understanding? Now next one. He is provided free housing facility which has been taken on rent by the company at 10,000 per month. Don't you think that this is accommodation provided? So whenever the accommodation is provided, you value the perquisite. Value of accommodation plus value of furniture minus the amount recovered from the employee, if any. Amount is not recovered. Why? Because it is given free. So no rent is recovered. So amount recovered will be nil. Furniture is not given with the accommodation. So furniture value will be nil. You just have to calculate the value of accommodation. So value of accommodation, the value will be coming. Value of furniture, nil, minus amount recovered from the employee, nil. Only calculate the value of accommodation. Now the accommodation is provided to the employee. Employee is a non-government employee. And accommodation is provided in a city where the population don't see only. Why? You see that population only if the accommodation was owned by the employer. But the accommodation is taken on rent by the employer. In that case, what you do? 10% of salary or the actual rent paid by the employer, whichever is lower. But for that you will have to calculate the salary. Salary for calculating the accommodation facility, yes or no, will include everything except 5 things. You remember that? But wait. That I'll not be able to calculate that salary till the time I don't solve my entire question. Because from the entire question I will come to know that what salary is given. I have to take the entire salary to value this perquisite, except those 5 things. But entire salary I'll be able to calculate only if I solve the entire question. Getting my point? So whenever you have any accommodation facility given in the question, always value that in the end. Because till the time you will not solve the entire question, you are not going to get the salary for valuing that perquisite. Understanding or not? So what we are going to do? We are going to value this perquisite in the end. After solving the entire question, in the end we are going to value this perquisite. Yes or no? Because other amounts are also to be considered. Understanding? Should I move ahead? Yes or no? Okay, pay attention. Now see, He is also provided. First, let me highlight this part, because I have to value this. Okay, I will highlight. Now see, he is also provided with the following facility. Facility of laptop. Costing. Laptop is given, transferred to you, or it is given for use. Facility of laptop given for use. Fully exempt perquisite. Taxable value will be nil. So no need to do anything with that 50,000. Yes or no? If instead of laptop it was any other movable asset, then we would have taken 10% per annum of that 50,000 as benefit, as the taxable value of that perquisite for use of movable asset. But if the movable asset given for use is laptop or computer, then the value of benefit will be fully exempt. No need to do any 10%, etc. Yes or no? Next one, company reimbursed the medical treatment bill of his brother, 25,000, who is dependent on him. Brother is dependent, specified patient, self, spouse, children. Dependent brother, dependent sister, dependent parents. Brother is dependent, specified patient. Treatment is done outside India. So till the time they are not telling you, we will always consider treatment is done in India. But treatment is done in GRE, government hospital, recognized hospital, employer hospital. Are they telling you that? Meaning the treatment is done elsewhere. And for that treatment, whatever benefit is given as medical facility will be fully taxable. Yes or no? So this 25,000 will be fully taxable. Understanding or not? Monthly salary of 1,000 of a housekeeper is reimbursed by the company. What is this? Domestic servant, provided by the employer, engaged by the employer, given to you. Engaged by the employer, given to you. Is it clause 3 perquisite? Or it is a clause 4 perquisite? Why? You might have engaged this servant and the salary of this servant was 1,000 rupees per month, meaning 12,000 for the full year. So you were liable to pay that salary. Employer is reimbursing that, meaning that it is a benefit for you. But this benefit is not clause 3 benefit. This is clause 4 benefit. Your obligation, your liability met by employer. Understanding? So even if you are a specified employee or a non-specified employee, this entire value will be taxable. So how much will be taxable? 1,000 into 12. 12,000 will be the taxable value of this perquisite. Yes or no? Now a gift voucher of 10,000 on the occasion of marriage anniversary. Employer is giving you 10,000 rupees gift voucher. Gift in cash, gift in kind. And the amount of gift in kind is more than 5,000. Will it be taxable? Either fully taxable or excess taxable. We'll go and write a note. We have charged the entire 10,000. Alternatively, excess 5,000 can also be taxed. That one note you are supposed to write. Yes or no? And if excess amount is taxed, your salary will change. Understanding? Next one. Conveyance allowance of 1,000. See, conveyance allowance they are saying. Of how much? 1,000 per month is given by the company towards actual reimbursement of conveyance spent on official duty. Meaning that, see, simple. Conveyance allowance given and that entire conveyance allowance is spent, then it will be fully exempt. Then it will be fully. So if 1,000 rupees of conveyance allowance is received and 1,000 you are spending, how much will be taxable? Nothing. 1,000 received, 1,000 spent, fully exempt under section 10 subsection 14. But they are saying that whatever you are spending, you are receiving that amount only. Whatever you are spending, reimbursement of that you are getting as conveyance allowance. Meaning first you are spending, then you are receiving. How much you are spending? 1,000. How much you are receiving? 1,000. So how much is exempt? 1,000. Entire 1,000 is exempt. Nothing will be taxable. Wait. Look at me. Allowance received 1,000. Allowance spent 1,000. How much is taxable? Nil. Allowance spent is, amount spent on conveyance is 1,000. that you are receiving as allowance. So 1000 is spent, 1000 is received. So how much is taxable? Nil. Understanding? Amount spent was 800, but you were getting 1000, then 200 will be taxable. But here 1000 is spent and that same 1000 you are receiving as allowance. That means entire allowance received is spent, will be fully exempt. Nothing will be taxable. Yes or no? So here the taxable amount will be nil. Now tell me one thing. If you are following 115 BSc, will this allowance be exempt? I will give you a tight slap. Traveling allowance, daily allowance, conveyance allowance, and that commutation, transportation allowance 3,200 for handicap. These four allowance will be still exempt if you follow 115 BSc. So even if you are following 115 BSc, this exemption was still available. But fortunately you are shifting out. Given in the first line of the question, check. You are shifting out. Second line. So this will be exempt. But if they are telling you assessee is following 115 BSc, shifting out, not shifting out, not shifting out, then also this was fully exempt. Yes or no? Because conveyance allowance is exempt under default as well as optional tax regime, both. Understanding? Next one. He is provided personal accident policy for which premium of 5,000 is paid by the company. Do you remember yesterday only we have had a discussion about this? What? Any premium on the personal accident policy of the employee paid by the employer is not paid to give him any personal benefit. It is given to safeguard myself. That God forbid if something happens to my employee, if the employee meets with some accident etc., I should not be liable to pay him compensation. Insurance company will pay the compensation. So I am safeguarding myself by paying this premium. So this premium is not paid with an intention to give you any personal benefit. And moreover, the benefit of this premium may or may not arise to the employee. Hence, this premium should not be taxable in the hands of employee as a personal benefit. Will be fully exempt. So what are you going to write down? Nil. So, nil. He is getting a telephone allowance. Telephone will be fully exempt, fully taxable, fully exempt, fully taxable. Sure. Confident. Very good. 6,000 rupees taxable. But what if every month telephone bill of 500 was reimbursed by the employer? Then it was a perquisite, fully exempt. But you are given 500 rupees per month. From this amount, do the expenditure. Expenditure is yet to be incurred. For that, an amount is given, that is allowance. I've already told you. But what if expenditure is already incurred and that expenditure was personal in nature, and for that if you are getting reimbursements, then that is not allowance, that is a perquisite. Very small difference. If you pick that difference, you will understand. But if you will not pick up that difference, always you will be confused in all these things. Hello? I am giving you 10 rupees. Buy a water bottle from this. This is allowance. Expense is yet to be incurred. Amount is given. Yes or no? This is allowance. But you bought a water bottle, 10 rupees. I am giving you reimbursement. This is a perquisite. Because the expenditure is already incurred. And now that is reimbursed or paid. That is what? Perquisite. Getting my point? Now one more place I would have put you in trouble. Can you see the conveyance allowance? Instead of that I would have written conveyance facility given for traveling between office and residence. Office to residence, residence to office. 3,200 per month exempt if the employee is a tight slab. Why? If allowance is given, fixed amount, regular basis, in addition to salary, to meet that expense, then it was allowance, then it was exempt. But if the facility is given, facility, conveyance facility, motor car facility for traveling between office to residence, and the monthly value is 5,000 per month. What are you going to do? Fully exempt, because that is not an allowance now, that is a perquisite. I have already explained this thing to you in detail when we were doing motor car facility at that time only. So if I am giving you 5,000 rupees per month to meet the cost of traveling between office to residence, what is this? Allowance, fully taxable. And if you are a handicap employee, then 3,200 will be exempt and the balance will be taxable. Did you understand this? Now let me reframe this entire thing. I am giving you a conveyance, I am giving you transportation facility for traveling between office and residence, and the monthly value of this facility is 5,000 per month. I am not giving you 5,000 rupees. I am giving you facility. I am sending you car. I am sending you car or some conveyance which will take you from the residence and drop you to the office. And from office, it will drop you to the residence. Am I giving you money or I am giving you facility? But the value of this facility per month is 5,000. 5,000 rupees is not given to you to meet that cost. Getting my point? So both the things are appearing same, but both are not same. First one, 5,000 rupees per month given to meet that cost of traveling between office to residence. Then it will be a allowance, fully taxable if you are a normal employee, and if you are handicapped, then 3,200 per month will be exempt. But if that same thing employer wants to, the examiner will change the same thing, twisting the language in the exam. You are not going to get straight things in the exam. Trust me on this. They will try to put you in lot of trouble. And the trouble will be facility of conveyance, facility of motor car is given. Facility is given for traveling between office to residence. The monthly value of this benefit is 5,000 per month. Same thing, 5,000 per month. Same thing, office to residence. But this 5,000 is not given as a fixed amount to you. 5,000 is the monthly value of that benefit which they have calculated and given. What is this? Allowance or a perquisite? And I have told you that this type of perquisite, the value will be fully exempt. Motor car facility, conveyance facility for traveling between office to residence, the benefit is fully exempt. So even that could have been given in the question. Understanding? Should I move ahead? Sure. All the things are done? Yes or no? Now I will value my accommodation. Now I will value my accommodation. Let's go and value accommodation. How will you value? Come on, tell me. 10% of salary you are going to take? So first of all, 10% of salary. So salary I will have to first calculate. Understanding? I will get one amount. Now that amount or actual rent paid by the employer. How much rent employer is paying? 10,000. For how many months? For the number of months for which the accommodation was occupied by you. For how many months you are occupying the accommodation? If nothing is mentioned, you are occupying the accommodation for 12 months. Yes or no? So 10,000 into 12. It will be 1,20,000. Now this 1,20,000 will be compared with this 10%. But to calculate this 10%, you will have to first calculate the salary. And what things you are going to take in the salary? Everything. Except 5 things. DA not in terms, don't take. Employer's contribution to provident fund, don't take. Value of all other perquisites, don't take. Exempt portion of allowances, don't take. But you will have to take taxable portion of allowances, yes or no? And lump sum, retirement or superannuation benefit, don't take. Yes or no? Except for these 5 things, take everything else on due basis. Now tell me, will you take basic on your calculator? Will you take DA? See, in this question, DA is in terms. So we'll have to take DA. Yes or no? 24,300. Will you take bonus? Yes. Add bonus. Will you take 8019? This is employer's contribution in excess of 12%. Taxable as salary, but don't count this amount as a part of this salary for valuing the perquisite. So don't take this 8019. Will you take 25,000? 25,000 is the value of perquisite. Don't take this 25,000. Yes or no? Now will you take this 12,000? Why? Because this is also the value of perquisite. Don't take this. Will you take 10,000? No, because this 10,000 is also the value of perquisite. Will you take this 6,000? Why? Because it is allowance. Taxable portion of allowance you are supposed to take. Now, on your calculator, 243 plus 24,300 plus 21,000 plus 6,000. Total is 2,94,300 is your salary. 10% of that? 29,430 or 1,20,000, whichever is. So the value of your perquisite will be 29,430. Understanding or not? Easy or difficult? Easy or difficult? So now you have calculated everything. How will you present the answer? Come on, tell me. Number 1, name of the assessee. Name of the assessee, Mr. X. Individual ROR. PAN dash. Previous year 25-26. Assessment year 26-27. Yes or no? Computation of taxable income under the head salary. Yes or no? Particulars and rupees 2 column. Number 1, basic salary. Now you will show the calculation of this basic salary. Working note. Basic salary, outer column 2,43,000. In the bracket you will write down. 20,000 into 9 plus 21,000 into 3. If you don't want to show the workings, yes or no, then write down in the bracket like this. Outer column 2,43,000 taxable. Second point, DA. DA in the bracket you will write down 10% of 2,43,000. Outer column 24,300 and assume to be in terms. Done, sir. Next one, bonus. Bonus equivalent to salary for the month of March. Outer column 21,000. Next one, employer's contribution to RPF in excess of 12%. Show the calculation, or show the calculation in the working note, or you can show the calculation in the statement itself. Yes or no? Outer column 8019. Next one, facility of laptop. Facility of use of laptop. In the bracket you will write down fully exempt perquisite. Outer column nil. Next one, medical reimbursement. Reimbursement of medical expenses for treatment of dependent brother. Outer column 25,000. In the bracket you will write down fully taxable since the treatment is not done in GRE. Yes or no? Next one, salary of the housekeeper reimbursed by the employer. In the bracket you will write down employee's obligation met by employer. Perquisite under 17 to 4. Outer column 12,000. Yes or no? Next one, gift voucher. Outer column 10,000. For this a note should come. Alternatively, excess amount can also be taxable. Yes or no? Next one, conveyance allowance. Outer column, nil. What you are going to write? Since the entire conveyance allowance is spent, hence it is fully exempt under section 10 subsection 14. Then outer column, nil. Yes or no? Next one. Premium for personal accident policy paid by employer. In the bracket, fully exempt perquisite. Outer column, nil. Yes or no? Telephone allowance. 6,000, 12 into 500. Outer column, 6,000. Now do the total. But wait, one more thing is remaining. Value of accommodation provided rent free. Now calculate that value in the statement or calculate that value in working note. Do whatever you want. Okay. And what will be the taxable value? 29,430. Directly outer column. Now on your calculator, start adding. 2,43,000, 24,300, 21,000, 8019, 29,430, nil, 25,000. Yes or no? Then 12,000, 10,000, nil, 6,000. Total 3 lakh 740 minus 50,000 standard deduction. Was there any professional tax paid? No. Was there any entertainment allowance reduction? No. So directly you are going to get 3,28,749. This is the taxable amount of salary. Understanding? Please check the final answer. See, 3,28,749. 378,749 minus 50,000 standard deduction, 328,749. This is your answer number 5. Will you be able to present this answer? See, why I am not presenting deliberately? Because I want to focus on explanation. Presentation is a part which you all can do now. Yes or no? 1 or 2 questions we have solved, no? Yesterday I gave you few questions for presentation. Did you do that? Everyone? Now today, whatever questions we have solved, will you do the presentation for those questions? Perfect. Come to the question number 6. Done, no? 6 is done. Wow, wonderful. Come to the question number 7. Now see, mark this question 7, important. Important question, good question. 7 and 8, both the questions which we are going to solve now, both the questions are important, okay. Now Miss Akanksha, a salaried employee, furnishes the following details for the financial year 25-26. Basic salary, what are you going to do? Taxable. Dearness allowance? Taxable. Commission? Taxable. Entertainment allowance? Taxable. Medical expenses reimbursed by the employer? Exempt. Treatment done in GRE? Then taxable. Next one, professional tax. Of this 50% paid by the, first of all, this 4,000 you will take as a deduction under 16 clause 3. But out of this 50% paid by the employer means 2,000 was your obligation met by employer. This will be first taxable as your salary. Perquisite. Yes or no? So first show this 2,000 taxable, then claim the deduction for this 2,000 plus another 2,000, 4,000 under 16 clause 3. Understanding? Next one. Health insurance premium paid by the employer. Exempt. Not taxable. Yes or no? Then life insurance premium of Akanksha paid by employer. Taxable. This is a perquisite. 17 subsection 2 clause 5. Your life insurance premium paid by employer is also your perquisite. Yes or no? Laptop provided for use at home. Actual cost of laptop to the employer is 45,000. Ignore, because this benefit is fully exempt. Children of the assessee are also using the laptop at home. So, should I dance for that? No. Okay. Employer company owns a Maruti Suzuki Swift car which was provided to the assessee both for official and personal use. Driver was also provided. All expenses are met by employer. Engine cubic capacity is more than 1.6 liters. Sir, same thing we have done in the last to last question. But there we have charged only 2,400. Here we'll charge 900 extra. Why? Because the driver is also provided. So what are we going to do? 2,400 plus 900 multiplied by 12. 39,000. Understanding? So this 39,600 will be the taxable value of this perquisite. Annual credit card fees paid by? Annual credit card fees paid by? Credit card is not exclusively used for official purpose. Details of usage are not available. Meaning that entire credit card expense will be considered as personal, and if this is paid by the employer, the entire benefit will be taxable. This is a credit card facility, fully taxable perquisite. Yes or no? So this will also be taxable. You are required to compute the income chargeable under the head salary if she pays tax under. Sir, this 16 clause 3 will not be available. And standard deduction will be 75,000. So first of all, tell me, will you charge 6,20,000? On your calculator, take 6,20,000. Add 4,20,000 dearness allowance, 75,000 commission, add 75,000, entertainment allowance 9,000. Sir, for entertainment allowance, deduction under 16 clause 2 will be available, will not be available. Why? First, the government employee is not a government employee, and second, the assessee is following. So 16 clause 2 will also not be available. Only 9,000 will be taxable. Did you add 9,000? Then add 18,000. Don't forget to add this 2,000 professional tax paid by the employer. Add 2,000 also. Then don't add 8,000. Add 26,000. Next you will add 39,600. And next you will add 7,000. How much is the total? 12 lakh? 16,000. What is this? Gross taxable salary. Out of this, are you going to get any deduction? Standard deduction. How much? So what is the total now? 41. This is your net taxable salary. Yes or no? Let's check the final answer. 11 lakh. 11 lakh. 41,600. 12 lakh 16,600. We got the same answers, no? Question number 7. Difficult, easy? Easy, no? This type of questions they ask in the exam. Feeling a little bit confident about the topic now? 2-3 more questions we are going to solve. Okay, no? Then you will get more confidence in this topic. Okay? Now, so now you'll be able to appear for the test, no? For this topic, if the test is kept. Will you miss the test or you'll give the test? Okay. And I'm going to set the paper for that. Like I had set for Unit 1 and Unit 2 test, which you gave and you scored very good marks. Okay. Question number 8. Now in question number 8, no, there is a very important concept which is going to come. Okay. See, the concept is, first of all, let's read this entire question and then we'll discuss about the concept also. Okay. I don't know how much you will understand right now, but I'll try my level best, because the concept which you are going to study here has a lot of has something to do with your capital gain chapter. But I will try to explain that thing. Okay, if you'll understand, very good. But if you will not understand right now, don't worry. In the capital gains chapter, entire thing you will understand. Okay. So first of all, Mr. Kunal, aged 27 years, is an employee in a private company posted in Delhi. Okay. He was appointed on 1st February 2024. Can I say this is the date of joining? In the scale of 60,000-1,000-70,000. Have you calculated a basic salary under grading system in the earlier question? In the same manner, the basic salary has to be calculated here also. Okay. Assuming that the salary becomes due on the last day, if nothing is mentioned. Okay. He furnishes the following information for the previous year 25-26. Now, dearness allowance is 25% of basic salary. So, first of all, you will have to calculate the basic salary. I am just going to discuss this. All the calculations you are supposed to do. Okay. So, first you will calculate the basic salary and 25% of that will be DA. And out of the DA, 60% will be in terms and the balance will be not in terms. So, first of all, calculate basic. 25% of that will be DA. And whatever DA you have calculated, 60% of that will be in terms and 40% will be not in terms. Both the DAs will be taxable. Bonus equivalent to 1 month's salary paid in November 25 on basic salary applicable for that month. So, first you will have to determine the basic salary for November month. And that basic salary, amount equal to that basic salary is given as bonus. So, that bonus also you are supposed to calculate. Now, next one, leave encashment. For previous year, do you remember leave encashment is exempt under section 1010 AA only if the leave encashment is given at the time of retirement. Are you retiring? So this leave encashment is given while you are in service. Any leave encashment given while the employee is in service will be fully taxable. Remember or not? Now he also received a motor car on 1st of December 2025. Cubic capacity exceeds 1.6 liter along with chauffeur. Along with chauffeur means driver is also provided for both official and simple. No, in the last question only we have done this thing. The motor car is owned by the employer and all the expenses are made by. So how much will be taxable? But if a small information will be changed, what is this made by? Now if you will charge 2,400 plus 900, 3,300, your answer will be wrong. All expenses are made by employee. Now instead of 1,800 and 2,400, you are going to charge 600 and 900 because the expenses are made by employee. Do you remember that? So 900 will be taxable because the engine capacity is more than 1.6 liter plus 900 extra because the driver is also provided. In that case, 1,800 will be taxable if the expenses are made by employee. But here, in our case, the expenses are made by. So you are going to do the same thing which you have done earlier in earlier two questions. Yes or no? 2,400 plus 900 extra for the driver also. Yes or no? For how many months? Only 4 months because this motor car was given from December to March. Next one. His employer granted him loan. So this is for interest benefit. Okay. Next one. His employer gave him a rent-free accommodation. This is very, very, very important adjustment. Please mark this important adjustment as important adjustment. Okay. This is for accommodation. And for this adjustment only, the cost inflation index is given here. Okay. Now, 7th, the furniture and appliances provided with the house were bought by the employer at an aggregate cost of 1,50,000 on 1/1/2024, electricity and water bills of 5,000 per month for the said house was paid by the employer, meaning that two things are there. First, furniture is also provided with the accommodation, and other than that, electricity and water bills of the house is paid by the employer. See, if the house belongs to the employer, then the water bills, etc., will also belong to the employer. Yes or no? This is clause 3 perquisite. Your water bills reimbursed by employer? No. The water bills of that house, the electricity bill of that house, which is owned by the employer, the bills will be coming on the name of, but the electricity, etc., is used by you, know. So electricity provided by the employer. Then water provided by the employer. This is clause number 3. Entire value will be taxable. Understanding? The amount paid by the employer to outside agencies for giving you electricity, water, gas, that will be your perquisite, fully taxable. Yes or no? So that will be taxable as clause 3 perquisite. And you are a specified employee, then this will be taxable. If you are a non-specified employee, this will not be taxable. Understanding or not? His colleagues gifted him a mobile phone worth 45. First of all, the asset is not a specified asset. I have already told you. The gift of specified assets will only be treated as gift under the head IFOS. Specified asset P. J. Das, paintings, jewelry, drawings, artwork, archaeological collections, sculptures and shares. If any of these movable assets are given as gift, only then that gift will be taxable under the head IFOS. This is a mobile phone, not a specified asset. And moreover, the value of the mobile phone is not more than 50,000. Hence, this gift will not be taxable under the head IFOS also. Forget about salary. If you will say that this is chargeable under the head salary, you are mad. Who is giving you the gift? Employer or colleagues? Any gift received from employer will be charged under the head salary. But the gift received from others will be charged under the head IFOS, provided it is specified movable asset and the value is also more than 50,000. So this will not be charged under the head IFOS. Why? Asset is not a specified asset and the value is also less than 50,000. Understanding? You are required to compute the income chargeable under the head salary, assuming that he wants to pay tax under. So what are you going to do now? You are going to calculate this entire amounts. One amount you are going to calculate, but leave this point number 6. Why? Because I am going to make that calculations for you. Okay, no? Other than point number 6, you are going to calculate everything. Start. And show the proper presentation in the question, solution. Guys, pay attention. See, tell me when he joined the employment, date of joining. Date of joining was 1st of February 2024. 1 year will be completed on 31st Jan 25. Okay. Then 1st of February 25 to 31st Jan 26. And then 1st of February 26 to 31st Jan 27. Yes or no? So at the time of joining, what was the salary fixed? Did they tell you? No. But the scale is 60,000, 1,000, 70, 2,000. Meaning that he would have joined at 60,000 per month in the first year. And in the second year, his salary would have been 61,000 per month. And then his salary would have been 62,000 per month. Yes or no? Now, I have to check my previous year. My previous year is 1st April 2025 to 31st March 2026. So 1st April 2025 will be between these two dates. And 31st March 2026 will be between these two dates. Okay, no? So can I say from April to January 26, April 25 to January 26, he was drawing a salary of 61,000. And from February, his salary changed to 62,000. Till 31st March, I will take 62,000. Yes or no? So 61 into how many months? 10 months, no? 10 months will be 6,10,000. And 62,000 into 2 months, February and March, will be 1,24,000. So the basic salary will be 7,34,000. Everyone got this? Okay. Now see, in the question I am going to write down here, 7,34,000 was the basic salary. Okay. So point number 1, basic salary. In the bracket you are going to write down 61,000 into 10 plus 62,000 into 2. Outer column 7,34,000. Now 25% of the basic. Calculate 25%. 83,000. This is the dearness allowance. Will be fully taxable. But out of this, 60% in terms, 40% not in terms. So how much is in terms? 1,10,000. And how much is balance? 73,400. Both the amounts are taxable, meaning entire 1,83,500 taxable. So point number 2, dearness allowance, underline, in terms. In terms, you'll open a bracket, you'll write down 7,34,000 into 25% into 60%. Yes or no? 734 into 25%. And of that, 60% is in terms. You'll get 1,10,000. Next line, not in terms. 7,34 into 25% into 40%. You'll get 73,400. Both the amounts are taxable. Next one. Bonus equal to 1 month salary paid in November 25 on basic salary applicable for that month. So tell me, what was the basic salary in the month of November? 61,000. That will be given as bonus. So your bonus will be 61,000. Everyone got this? Entire leave encashment of 10,000 will be taxable because this leave encashment is while in service. He received a motor car. So here 2,400 plus 900. Chauffeur is also given, no? Into how many months? 4 months. So total is 31,000. 13,000. Total 13,000 only. 13,200 will be taxable for this perquisite. Yes or no? Now employer is giving him a loan of rupees 2 lakh on 1st of June 2025, which is repayable in equal quarterly installments over 2 years starting from 1st October 2025. Equal quarterly installments over 2 years starting from 1st October. The State Bank of India lending rate for the loan is 9.5%. This is SBI rate 9.5%. Employer is charging 5.5%. So how much is the interest benefit? 4%. 4% you are supposed to calculate on 2 lakhs. But wait. Repayment will start from? And how much will be the first repayment? Quarterly repayments over 2 years. So how many quarters will be there in 2 years? 8 quarters. So in 8 quarters this 2 lakh has to be repaid. So 2 lakh divided by 8. 25,000. 25,000 every quarter will be paid. And the first payment will start from 1st October. Yes or no? So tell me, loan was taken in June. June, July, August, September. These 4 months. The loan amount outstanding will be 2 lakhs. On that 2 lakh, interest benefit will be 4%. So can I say 2 lakh starting from June? Starting from June, July, August, September. 2 lakh into 4% into 4 by 12. This is the interest benefit from June to September. Yes or no? How much? 2667. Done, sir. Then from October, your loan amount outstanding will change. Loan amount outstanding will, because on 1st October, you are making a repayment of 25,000. So in the month of October, now the loan will be 1,75,000. So October, November, December, these 3 months, the loan amount will be 1,75,000. Yes or no? On that 4%. For how many months? 3 months. 3 upon 12. How much? 1,750. No? 1750. This is for October, November and December. Now on 1st January, meaning next quarter, you are again going to pay 25,000. Yes or no? So January, the loan amount outstanding will change. It will become 1,50,000. It will become 1,50,000. So 1,50,000 for January, February and March. Next repayment will be made in the next year. So for January, February and March of my previous year. Jan, Feb and March. My previous year. How much loan outstanding, guys? 1,50,000 on that 4% into 3 by 12. 1,000 and calculate the total. 5,917. Please check the answer now. Please check the answer. 5,917 is there or not? Same amount? 5,917. In the answer you are getting this now? So this will be taxable for perquisite. So point number 5 done. Point number 6. Point number 6. Pay attention. Very important point. His employer gave him a rent-free accommodation, fully furnished in Delhi from 1st of April 2024. Now, when he joined in the February 24, his employer since then has given him one accommodation. Yes or no? He joined in 1st February 24, but from 1st April 2024, he was given a accommodation in Delhi, and that accommodation was owned by the employer. Perquisite value of such furnished rent-free accommodation during the previous year 24-25 was perquisite value during the previous year 24-25 was how much? 92,000, guys. This is not the value for this year. This is the value for last year. So last year the same perquisite was given, same accommodation was given. Last year the value of this accommodation was 92,000. But we are supposed to calculate the value of this same accommodation in this year. Yes or no? So this year the value of this accommodation will be determined. What will be the value of this accommodation? 10% of salary. Because the accommodation was owned by the employer in Delhi. And Delhi has a population of more than 40 lakhs. So what will be the value of this accommodation? 10% of salary. Salary for this year. Yes or no? So first I will calculate the salary of this year. 10% of that I will calculate. That will be the value of accommodation for this year. But remember, that value cannot be more than, this year's value cannot be more than indexed value of the year in which such accommodation was provided for the first time. This is a new concept which I am going to explain now. Understand this thing. Guys, which was the year in which the accommodation was provided for the first time? Okay. So can I say rent-free furnished accommodation at Delhi? This was provided for the first time. Can I say first time? The accommodation was provided in which year? And that same accommodation which was provided in that year is also provided in my previous year. Getting my point? So in my previous year 25, 26, in this year also this same accommodation is provided. Same accommodation means RFFA at Delhi. Now see, if RFFA at Delhi was provided in the first year, what was the value of that accommodation in that year? Taxable value of this perquisite in that year was 92,000. It was 92,000. Now this year I will have to calculate the value. This year I will have to calculate the value. How will I calculate? I will have to take the 10% of salary. Guys, 10% of salary. First I will calculate the 10%. So this value which I am going to calculate, what did I say? This value which I will calculate, with this I will have to also add the value of furniture also. With this I will have to also add the value of furniture also. So I will add value of furniture. So for furniture, can you see how much was the furniture? Furniture and appliances provided with the house were bought by the employer, meaning the furniture was owned by the employer. Own furniture was given. And what was the actual cost of that furniture? 1,50,000. So can I say 10% per annum of this furniture will be my taxable value? Hello. So here for furniture, how much will be taxable? 10% per annum of actual cost of furniture. Now wait, this year's value is not yet determined. I have to determine the value. Last year's value of the same accommodation was 92,000. Last year's value was 92,000. This year's value is 10% of salary plus 10% for furniture. Getting my point? So I have to calculate the accommodation value of this year like this. But this value which I am going to calculate cannot be more than the indexed value of that year in which the accommodation was provided for the first time. What did I say? The value of accommodation which I will calculate today, the value of accommodation which I will calculate cannot be more than the indexed value. Which value? Of the same accommodation provided in the first year. First time when this accommodation was provided, what was the value? 92. I will have to take the indexed value out of that. For that, the indexation is given. CII. Can you see what is the CII? CII for 2 years are given. 24-25 it is 363 and 25-26 it is 376. Okay. Now please pay attention. See here. I am going to tell you the indexed value. First of all, you will have to understand the concept of indexation. CII, Cost Inflation Index. Can you see this table in front of you? Hello? Can you see this table in front of you? What is the base year you can see? First year is 2001, 2. Okay. This concept comes in capital gains, which I am teaching you right now only, so that we can solve the question. Understanding? What is the base year? And what is the cost inflation index written? Forget about the percentage and everything. Okay, no. 100 is the cost inflation index. 1 year is taken as base. If something is costing 100 in 2001-2, every year inflation will rise? Yes or no? So don't you think because of inflation the same thing will cost more later on? So that same thing which had a cost of rupees 100 in the year 2001-2, its cost became 105 in the next year. So now that same thing I can buy for 100? No, 105. Why this happened? Because of inflation. Because of inflation increased in 2003-4 also. Hello? And in 2003-4, the same thing was available for how much? So the cost of that thing became higher. It became 109. Likewise, in the next year, the cost increased to 113. The cost increased to 117. Likewise, see, the cost is increasing, increasing, increasing. What is this year? 24, 25. How much is the cost? What does it mean, you know? Any item or anything which had a cost of rupees 100 in 2001-2, in the year 24-25, it has a cost of rupees 363. This is nothing but index. Index means if we take 100 as for base year, 100 becomes 105. That becomes 109. That same thing becomes 113, 117. Likewise, that same thing which had a cost of rupees 100 is now costing how much? 363. Almost more than 3.5 times increase in the cost. Now, if you see this index for the next year, 25-26, this index is 376. Now, who notifies these CII? The central government notifies these CII. This is known as Cost Inflation Index. This is known as Cost Inflation Index. Now tell me, here if we see, when in the year 2024-25, which year, sir? 2024-25. In this year, what was the CII? What was the CII given in the question? 360. Now don't you think in the next year the inflation will rise and the inflation index will change? In this year the CII is 376. Understanding? Pay attention, everyone. Now tell me one thing. What was the taxable value in this year? How did you calculate this taxable value last year? Like you are going to calculate in this year. This year, how are you going to calculate? 10% of the salary plus 10% for the furniture, etc. Like this only you had calculated in the last year also. So last year, when you calculated this amount of perquisite, last year the value of this perquisite was 92,000. Meaning that the same accommodation which was given in the last year, that same accommodation is given in this year. Don't you think inflation will have an effect on that? And because of that, the value of that accommodation should rise from this level to this level. This was the value when the CII was 363. This was the value when the CII was. How much should be the value here when the CII is 376? Simple cross multiplication. Yes or no? Simple cross multiplication. If you remember the logic, I told you that whenever an employer gives you an accommodation, you save some rent. Employer is giving you accommodation, and because of that accommodation, you are saving rent. How much rent you are saving? 10% of your salary. Because the accommodation was provided in Delhi, having a population of more than 40 lakhs. If you would have taken an accommodation on rent in Delhi, how much rent you would have paid? At least 10% of your salary you would have paid as rent. Hello, sir. Meaning, the savings of rent was how much? 10% of your salary. Meaning 10% of your salary which you would have paid as rent, you are not supposed to pay that rent, because in that city, the employer has given you accommodation. So the rent which you are saving, because you are getting an accommodation in that city, is nothing but your benefit. Yes or no? Do you remember this? Yes or no? Give me the answer. How much rent you are saving? 10% of your salary. Meaning, if last year you would have taken an accommodation on rent, you would have paid how much rent? 92,000. The rent which you have saved last year can increase to this year because of inflation. It should increase by. If this rent would have been paid at this inflation level, hello, so how much rent would have been paid in this year at this inflation level? Can you do a cross multiplication? This multiplied by this divided by 363. So how did you calculate? You took the taxable value of perquisite. You took the taxable value of perquisite for which year? Of first year. Then you multiplied 376. Then you multiplied 376 is what? CII. CII of current previous year. Divided by, you divided 363, which is nothing but CII of first year in which that same accommodation was provided to you. Yes or no? So apply this formula. Now tell me, what was the taxable value? Into 376 divided by 363. Tell me how much? 95,000 to 95. This is indexed value of same accommodation. This is indexed value of same accommodation. Getting my point? Now this year, whatever value you are calculating, cannot be more than this value. So first you will have to calculate this year's value. If this year's value is more, your perquisite will not be more, your perquisite will be only 95,295. Got it, sir? Hello? But what if this year's value you have calculated and this year's value is less? Then whatever value you have calculated, that will be taxable. Understanding or not? So first you will have to calculate this year's value. And now you will have to compare this year's value with indexed value. indexed value of that same accommodation which is given to you for the first year. And which was the first year in which this accommodation was provided? Tell me. 24-25. So in 24-25, whatever was the value of this accommodation you have calculated, whatever was the value of this accommodation calculated for the first year in which that accommodation was provided to you, that value you are supposed to index. That value, in that value you are supposed to put inflation. Put inflation in that value. That inflated value should be the maximum value taxable in this year. Any value higher than that will not be taxable. Understanding? Now, what if this accommodation was provided in 23-24? Then, here the value of 23-24 will come. Hello? If this year was 23-24, so the value of 23-24 will come, and CII of 23-24 will be given in the question. Hello? So what will you do? You will take the taxable value which you calculated for the first time, the year in which the same accommodation was given to you for the first time. See, this whatever discussion is happening now is valid only if the same accommodation was provided for more than 1 year. So if this Delhi accommodation was provided to you, in 24-25, if that same accommodation is provided to you in 25-26 also, then the value of that accommodation, same accommodation in this year, cannot be more than indexed value of that accommodation for the first year. Getting my point? What if this accommodation was provided in 23-24 for the first time? So whatever value you have calculated for 23-24, now you will have to index that value and bring that value to 25-26, indexed value. Yes or no? What if this accommodation was provided in 19-20? For the first time this accommodation was provided to you in 19-20. Then this amendment has come only from 23-24 onwards. Prior to this, there was no concept. This concept has come for the first time in 23-24. So if the same accommodation was provided to you, for example, in 23-24, what are you going to do? Come on, tell me. Taxable value of this perquisite for 23-24. Okay, now you are getting that same accommodation in 24-25 also, and in your previous year 25-26 also you are getting the same accommodation. Delhi accommodation here also, Delhi accommodation here also, Delhi accommodation here also. So are you going to calculate the taxable value for this year? This taxable value cannot be more than indexed value of first year. Understanding? So what was the first year in which the accommodation was provided? What was the first year in which the accommodation was provided? 23-24. So take the taxable value of 23-24, index this value to 25-26. So for that, what are you going to do? CII. For which year? 23-24 you are going to take, and CII for which year? 25-26 you are going to take. Meaning the taxable value was this much when the inflation was this much. Today the inflation is this much, then how much will be the taxable value? So for example, the CII for this year was 348 and CII for this year is 376. The value you calculated for the first time was 70,000. How much? 70,000. So 70,000 into 376 divided by 348. How much? 75,000. So this year whatever value you are calculating cannot be more than 75,632. Will you remember this? But wait. What if this Delhi accommodation was provided for the first time in 2019-20? Which year? 2019-20. 1920, same accommodation was given. 2021, same accommodation was given. 2122, same accommodation was given. 2223, same accommodation was given. 2324, same accommodation was given. And then after that, 2425 also, same accommodation was given. And in this year also, that same accommodation is given by the employer. Yes or no? In which year? 25, 26. Now tell me, the accommodation provided in Delhi was provided to you for the first time in which year? 1920. So since that year, this accommodation is with you. So which was the first year in which the accommodation was provided? 1920. In that year, have you calculated the taxable value? Yes or no? Now you are supposed to bring this taxable value in today's terms by putting indexation. Don't do that. Amendment has come in 23-24. So what they are telling, if the accommodation was provided for the first time prior to 23-24, it was provided for the first time prior to, ignore that year. Ignore that year. Take the value of 23-24. Take the value of 23-24. Now tell me, Delhi accommodation, Delhi accommodation, Delhi accommodation, Delhi, Delhi, Delhi. The accommodation which was provided in Delhi was provided prior to 23-24. So if it was provided prior to 23-24 for the first time, then you are going to take that year or 23-24, whichever is later, as first year. So which will be the first year? 1920 or 23-24, whichever is later. So which is the later year? So taxable value of this year you are supposed to index and not the 1920 value. Getting my point? Forget about the earlier years. Start indexing from 23-24 onwards. Got it, sir? So tell me, what was the CII here? What was the CII here? 348. What was the taxable value you calculated here? It was, we already calculated, no? For example, it was 80,000. It was 80,000. So CII for this year will be 376. So 80,000 into 376 divided by 348. How much? 430. Your taxable value for this year. First of all, calculate the taxable value of 25-26. The taxable value of this year cannot be more than 86,437. Did you understand this concept? 100%. If salary question will be there in the exam, 100% this concept is going to come. Mark my words. If salary question will be there in the exam, confirm this concept is going to be there. Because 23-24, this amendment came. Since then, they have not tested it. Now it is the correct time to test it. Till last year, no, ICI study mat did not have this question only, which you are solving right now. This is a new question introduced in the ICI study mat. And don't get surprised if you get the same question which you are solving right now in the exam with a little bit different figures. Understanding? You can get the same question in the exam. That is why I told this question is important. And see, I would have told you this concept earlier, but you would not have understood. For that, I had to come to this question. Will you remember this? So first of all, what is my previous year? Tell me. What is my previous year? 25, 26. In my previous year, the accommodation is given in Delhi. Is it given for the first time in my previous year? Or earlier only it was given? That same accommodation which was given to me in any earlier year, that same accommodation is given to me in this year also. So the value of that accommodation which I will calculate in this year, the value of this accommodation which I am going to calculate in this year cannot be more than the indexed value of that same accommodation for the first year in which that accommodation was provided for the first time. So value of that accommodation for the first year, value of that accommodation for the first year in which that accommodation was provided for the first time was how much? Given in the question. Because 24-25 was the year in which this accommodation was given for the first time. Now I will have to take the indexed value of this benefit. So how I will do that? How I will do that? Taxable value of that perquisite for the first year. Taxable value of that perquisite for the first year multiplied by CII of my previous year divided by CII of that year in which it was provided for the first time. This will give me the indexed value of the same accommodation. Now this year whatever value of this accommodation I am going to calculate, that value cannot be more than this indexed value 95,295. Will you remember this? And this concept is applicable only if the accommodation is provided by employer to the employee who is a non-government employee. Because for government employee, what is taxable? 10% of salary, 7.5% of salary, 5% of salary? No. What is taxable? Licensing fees. So every year the licensing fees will be taxable. That you are not going to index. So this benefit is, this concept which we are doing is applicable only in the case of non-government employees. Okay, who are getting the accommodation from their employer. Whether the accommodation is owned or accommodation is taken on rent will not make any difference. So if the accommodation is taken on rent, then 10% of salary or actual rent, whichever is lower, that will be the value for this year, and that value cannot be more than indexed value. Getting my point? If the accommodation was owned by the employer, then 10% of salary or 7.5% of salary or 5% of salary, depending on the population of the city. That value which I will calculate cannot be more than indexed value of the same accommodation for the first year in which the accommodation was provided for the first time. If the first year is 23-24, then take the value of 23-24, take the 23-24 as first year. If the first year was 24-25, then take 24-25 as the first year, take the value of 24-25. But if this accommodation was provided prior to 23-24 for the first time, then ignore that year, take the value of 23-24. 23-24 will be treated as the first year. So the year in which the accommodation was provided for the first time or 23-24, whichever is later, whichever is, in our case, in our question, 23-24 or the accommodation was provided for the first time in 24-25, whichever is later, 24-25. So 24-25, what is the value? 92,000. You are supposed to take the index value for that. Getting my point? Hello? If in this same question they would have told you this accommodation was provided for the first time in 22-23. So will you take 22-23 value or 23-24 value? 22-23 or 23-24, whichever is later. Take the value of 23-24 and index that value. Got it, sir? Everyone? Okay. Now pay attention. In the solution, see here, if you will see the solution now, how they have presented the things. See, 95,295. Can you see? Did we calculate the same value? 95,295. How did we calculate this? First of all, we'll have to calculate the value for this year. What will be the value of accommodation for this year? Delhi accommodation is provided rent free, no? Hello? Accommodation at Delhi in this year provided rent free. This accommodation which was provided in Delhi is owned by the employer given in the question. So what will be the value of this accommodation? 10% of salary. So first of all, you will have to calculate the salary. Now tell me, in salary, will you take basic? On your calculator, take basic. Will you take DA? No, you will take DA in terms. DA not in terms, not to be taken. Do you remember? To value the accommodation facility, you will take salary, but in that salary, you are not going to take DA, not in terms. But will you take DA in terms? How much was DA in terms? 1,10,100. So add 1,10,100. 734 plus 1,10,100. Yes or no? Will you take bonus? Yes. Will you take leave encashment? Yes. Lump sum retirement benefits are not to be taken. No. Lump sum retirement or superannuation benefits are not to be taken. This is not a retirement benefit. This is not a superannuation benefit. Getting my point? So this is as good as salary for this year only. Getting my point? Will you take 10,000? Yes. Will you take the value of other perquisite? No. So don't take 13,200. Don't take interest benefit. Then facility of use of electricity and water. Don't take that. Mobile phone. Don't take that. What is the value on your calculator? 9,15,100. 10% of that will be 91,510. Furniture is also provided by the employer. Hello, what is the cost of that furniture? 1,50,000. 10% of that, 15,000. So 15,000 will be the value of that furniture. So what is the value of that accommodation which is supposed to be taxed in this year? This much. But this cannot be more than indexed value of the same accommodation calculated in the first year. So you have calculated this value. If I would not have told you that concept, then this value was taxable. But is it the same accommodation which was given earlier also? Yes. For the first time, this accommodation was given in 24-25. In that year, the value of that accommodation was only 92. So this year, how come the value is more than 95,295? This year the value should be 95,295. Yes or no? And how come your value is higher? Your value cannot be more than 95,295. How did you calculate this? First year value was 92 multiplied by 376 divided by 363. So you have got the index value. So value of this accommodation for previous year 25, 26 cannot be more than index value. So which value you will take? Will you take 1,06,000 as taxable or you will take 95,000 as taxable? 95,295 will be the taxable value of this perquisite for this year and not this value. Got it, sir? 100% I am telling you, if salary question will be there in the exam, this concept they are going to ask you. Confirm. Okay. So, this is the taxable value of perquisite. Now, see, your employer is also paying electricity bills and water bills of that house in which you are staying. That house belongs to employer. House belongs to. So, electricity and water bills are also on the name of employer. Meaning, the employer is procuring electricity and water from outside agencies and providing you that electricity and water. How much is the monthly bill? 5,000 into 12. That 60,000 is the amount paid by the employer to outside agencies to provide you electricity and water. Understanding? So that amount will be taxable value as per clause number 3. 17 subsection 2 clause 3. This is your perquisite. And is there any recovery made for that electricity or water? No. If any recovery is made from you, that recovery will be reduced out of this 60,000 and the balance amount will be taxable. Getting my point? But since there was no recovery made from you, that entire 60,000 will be your benefit, will be fully taxable. Yes or no? Mobile phone received as gift from the colleagues. No need to write here. No need to write. Not taxable under the age salary. No need to write also. Understanding? So now tell me, did you calculate all these amounts correctly? Everyone, did you calculate all these amounts? Which is the important amount in this question? First of all, valuation of interest benefit. Here you can go wrong. And second, value of this rent-free accommodation. Here also you can go wrong. Please pay attention in these two parts. Rest everything is easy. Understanding? So, calculate the gross salary. What is the gross salary? 11 lakh, 62,912 and minus standard deduction. Why 75? Given in the question that you are following 115 BSc. So take 75,000 standard deduction and this will be taxable. Taxable value of perquisite. Understood, sir? Now pay attention. What if they are telling you that the assessee has shifted out? Everything will remain same. Nothing will change. Everything will remain same. But instead of 75,000, now you are going to take a standard deduction of 50,000. And the taxable value will be 11 lakh 12,912. Understood, sir? Done? This is the end of question. End of all the questions from ICI study mat. Okay. One small concept is remaining. Relief under section 89. Now what is that relief? Pay attention. See. Read this part. When the assessee is charged for arrears of salary, advance salary, gratuity, commuted pension, etc., then he may fall under higher rate of tax. Example, instead of 20%, he may have to pay 30%. Okay. Hence, to compensate such aggrieved assessee from such higher rate, relief is provided under section 89. So what is the meaning of this entire thing? Tell me, this year your salary is 50,000 per month. How much? So for 12 months, how much salary should be there? How much salary should be there? 6 lakhs. How much? So if your income is 6 lakh, you are falling in the slab of 20%. You're falling in the slab of 20%. Yes or no? How much is your income? 50,000 into 12. 50,000 into 12. Meaning 6 lakh rupees is your income. This year's salary is 6 lakhs. So definitely if this year's salary is 6 lakhs, for the 12 months, how much you should receive? 6 lakh. So 6 lakh should be your income, which should be taxable in this year. And because of that, your slab rate, if you see your slab rate should be 20%. So you think that you are going to pay tax 20% in this year. Because your income for this year is 6 lakh. But sometimes it happens that some arrears of salary, which was not taxed earlier on due basis, is received in this year. 5 lakh. Possible, not possible? So, don't you think that even that arrears will be taxable in this year now? And because of the taxability of arrears in this year, now your salary is 6 lakh or it became 11 lakh. Immediately you will shift to 30% slab. Because of some extra amount of salary getting taxable in this year, which is not for this year. Advance salary for next year you have received in this year. Salary is taxable on due or receipt, whichever is earlier basis, so it will become due in the next year. But since it was received in this year, it is taxable in this year. So this year, whatever income should be taxable, hello, that income is not getting taxed. Higher income is getting taxed, and as a result of that, you have to pay higher taxes. So you will be given some relief for that. Don't worry. If you have to pay higher taxes because of extra salary getting taxable in this year, the government is ready to give you relief from your taxes. And that relief is given in section number 89. That relief is given under section 89. Now this relief is applicable to whom? Applicable to an assessee who is in receipt of arrears of salary, advance salary, any other, or in any other way, in any one financial year is in receipt of salary for more than 12 months, or profit in lieu of salary under 17(3) like gratuity, commuted pension, etc., arrears of family pension. If the employee, if the assessee is receiving all these amounts during this year, and as a result of that, he has to pay higher taxes. As a result of receiving these amounts in the current year, he has to pay higher taxes. So to compensate him to give him some relief from those higher taxes, section 89 is there, which says that some relief we will give in the tax, because you are ending up paying tax at higher rates because of chargeability of these amounts in this year. Getting my point? Hello? So note, assessee who receives leave encashment during the continuation of his service can also claim the relief under section 89. Sometimes what happens? Leave encashment happens while you are in service, like we saw in the question number 8. Leave encashment, how much? 10,000. So even because of that leave encashment, there is a possibility you are paying more tax, because that leave encashment, extra salary you are going to get, no? So that extra salary, whatever extra amount you are going to get, because of that, you will end up paying more taxes. And to give you the relief of taxes, section 89 is there. Next one, conditions to claim relief under section 89. What is the condition? Due to above receipts. What are the receipts? Number one, arrears of salary or advance salary, or in any other way, in any one financial year, you are in receipt of salary for more than 12 months. So if you are receiving salary for more than 12 months in this year, or you are receiving arrears of salary, or you are receiving advance salary, because of that, 12 months income is not getting taxed. 12 months income is not getting taxed, higher income is getting taxed. And as a result of higher income, you are paying higher taxes. Or profit in lieu of salary also you will receive. Profit in lieu of salary we saw yesterday. Okay, even those profits in lieu of salary you are going to receive. Gratuity also you might receive. You might also receive pension also. Because of that, higher amount of tax has to be paid. This year's income will not be taxed. Higher income will be taxed as compared to this year's income. And arrears of family pension can also be received. What is this? Family pension will come in income from other sources. Now, because of any of these amounts, the total income of the assessee is assessed at a rate higher than that at which it would have been assessed. Then the assessee has made an application that, please assessing officer, this year my income should be this much only, but because I am receiving these amounts also, so as a result of that, this year's income, which should be taxed only this much is not getting taxed, a higher amount is getting taxed. As a result of that, I have to pay a tax at higher rates. So please give me some relief. That application the assessee has to make. To whom? To the assessing officer. Then assessing officer will calculate the relief in this manner, and this relief will be available from the tax liability. From the tax liability. So how to calculate this amount of relief? Okay, this entire format you will come to know once I'll solve the question. This format is just a time pass. Okay, first of all, pay attention. Tell me, what is your previous year? What is your previous year? 25, 26. Okay. Now in your previous year, the salary, computed salary, which should be taxable. Computed salary meaning after taking standard deduction and everything. Okay. Your computed salary was only 8 lakhs. How much? Only 8 lakh after taking standard deduction and everything. So this is the income which should be taxable in this year. Hello? But in this year, no, you received arrears also. Arrears of previous year, 16-17. Which year? There was some salary in arrears in 16-17, which you could not receive in that year. And actually, that arrears of salary was not taxed in that year. On what basis? Due basis. So, arrears of 16-17 was 3 lakhs. How much? 3 lakhs. And that salary, that arrears of salary, which was not taxed in that year, will be taxed in this year. Why? Because on due basis, if the arrears were not taxed earlier, it will be taxable on receipt basis. When it is received? 25-26. So it will be taxable in 25-26. Now instead of 8 lakh, you will pay tax on 11 lakhs. So now tell me, your salary will be 8 lakh or your salary will become 11 lakhs? Yes or no? 11 lakhs. First of all, tell me, on 11 lakh, some tax you are going to pay? Hello? And on 8 lakh, some tax you would have paid. Don't you think the tax which you are going to pay on this 11 lakh will be higher as compared to the tax which you would have paid on this 8 lakhs? So how much extra tax you are going to pay this year? You have to calculate that. Can you calculate the tax liability over here? Assuming that the assessee opting out. What rate? Normal rate. So first of all, what we will take? We will take the total income. We will take the total income of which previous year? 24-25. This is including what? Arrears. Including. So what was your total income including arrears? What was your total income including arrears? 11 lakhs, no? So total income including arrears was 11 lakhs. How did you get it? 8 lakh, which was the income for this year, plus 3 lakh of arrears taxable in this year. Now can you calculate the tax? Tax on above total income? Calculate. First 2 lakh 50, no tax. Then 2 lakh 50 to 5 lakh, 5%, that is 12,500, plus 5 lakh to 10 lakh, it is 20%, will be 1 lakh. Total income above 10 lakh is 1 lakh. On that you will calculate 30%, will be 30,000. Okay, calculate this. Plus 4% cess. 4% cess also you have to add, no? So how much? 1,48,000. Can I say this much tax you have to actually pay in this year? But what if the arrears was not taxable in this year? How much should have been your total income? Only 8 lakh. Can you calculate tax on that? So I will take total income of which previous year? Oh, sorry. This is previous year 25-26. Huh? My previous year 25-26. So previous year 25-26. What I will write in the bracket now? In the bracket, excluding arrears. How much? 8 lakhs. So including arrears it is 11 lakh. Excluding arrears it is 8 lakhs. So how much will be the tax on above total income? First 2 lakh 50, no tax. Then 12,000. Then 5 lakh to 8 lakh. On 3 lakhs, 20% will be plus 4% cess. 75,000. Now this much tax you would have paid. Meaning because of arrears getting taxable in this year. What did I say? Because of arrears getting taxable in this year. How much extra tax you are paying? So first of all, can I say this is my tax 1? Can I say this is my tax 1? And can I say this is my tax 2? And now I will calculate difference. This is difference 1, which is nothing but tax 1 minus tax 2. How much? 72,800 extra tax you have to pay in this year because of arrears getting taxable in this year. Arrears was relating to which year? Now let's go to 16-17 and check what we did in 16-17. Okay, no? So first we'll go to 16-17. In the previous year, 16-17, your total income, what did I say? Total income of previous year 16-17 in which was already assessed. What did I say? Already assessed was 4 lakhs. Was how much? In that year, you actually paid tax on how much amount? 4 lakhs only. And definitely that 4 lakh did not include 3 lakh of arrears. Now just imagine if this 3 lakh would have been taxed in that year only. On how much amount you would have paid tax in that year? You would have paid tax on 4 lakhs or you would have paid tax on 7 lakhs. So how much tax you would have paid at that time? If 7 lakhs would have been taxed. And how much tax you have actually paid in that year, because in that year only 4 lakh was taxed. We'll calculate the extra tax for that year also. So what we are going to do now? We are going to calculate tax for that year also. Which year? 16-17. The year to which the arrears relate. So which is the year? 16-17. Which is the year? In that year, if the arrears was taxed, so what was the total income? What was the total income of previous year 16-17 including arrears? Come on, tell me. Total income will for that year will be 4 lakh, which has already been assessed, plus 3 lakh would have been taxed in that year. So my total income for that year would have been 7 lakhs. Getting my point? On this 7 lakh, how much tax I would have paid? Can you calculate the tax on above amount? Don't calculate. Don't calculate. Don't even try to do that. Because you don't know the tax rates for 16-17. You will apply the same rates for this year in 16-17. You know the same tax rates were available that time. Huh? The tax rates which you are going to apply, which you know, are for 25-26. How the bloody hell you can apply those tax rates for 16-17? In 16-17, the tax rates were different. Now you'll have to remember those tax rates. No, don't worry. Because the year can be 15-16 also. This year can be 18-19 also. Examiner can give you any year over here. Yes or no? So it will be the responsibility of the examiner to give you the tax rates for this year also. You will have to apply the tax rate of that year to calculate tax for that year. Yes or no? Now come in your ICI study mat. Last illustration number 25. Illustration number 25. Can you see this illustration number 25? Okay. Now here rates of tax are given. Can you see? So what is this 17-18, sir? 17-18 is the assessment year. Assessment year 17-18 means previous year 16-17. So for previous year 16-17, the rates will be given like this. Hello, sir. So what are the rates? For senior citizens, the rate was up to 3 lakh, no tax, 3 lakh to 5 lakh, 10%. 5 lakh to 10 lakh, 20%. Above 10 lakh, 30%. And for other individuals, the rate was up to 2 lakh 50, no tax. 2 lakh 50 to 5 lakh, it was 10%. And we usually take 5%. It was 10% at that time. And then 5 lakh to 10 lakh, it was 20%. And above 10 lakh, it was 30%. See, this type of rate will be given in your question. Okay. And fortunately, we have taken which previous year? 16-17. Previous year 16-17 means assessment year 17-18. So if this is for assessment year 17-18 means previous year 16-17 the rate of tax was this only. Now we have not assumed that the assessee is a senior citizen. We have not assumed that the assessee is a normal assessee. So we will apply this rate or this rate. Left or right? Right. Why? Because the assessee is not a senior citizen. So in 16-17 the tax rate was this. So we have to apply this tax rate and calculate the tax for 16-17. Yes or no? So now let's go to the 16-17. How much is your total income? No. Total income actually assessed was 4 lakhs. But if the arrears also would have been taxed in that year only, then how much would have been my total income in that year? 7 lakhs. I would have paid tax on 7 lakhs. So how much tax I would have paid on 7 lakhs? On first 2 lakh 50? On first 2 lakh 50, no tax. Then 2 lakh 50 to 5 lakh. Don't take 5%, take 10%. It will be 25,000. Yes or no? And then 5 lakh to 7 lakhs. On 2 lakh, it will be how much? 20% will be 40,000. Can you calculate? Plus. Wait. See the note. Education says 2% and secondary and higher education 1% was attracted on the income tax for the assessment year 17-18 and that time 4% cess was not applicable, only 2% and 1%, meaning 3% cess was applicable at that time. And if you will apply this 4%, you are gone. So the rate was also different and that year the cess was also only 3%. So apply the rates applicable for that year, apply the cess applicable for that year. Cess was only 3%. Now tell me, how much? 66,950. This is the tax which you would have paid if 3 lakh would have been taxed in that year. But was 3 lakh taxed in that year? Was 3 lakh taxed in that year? So you paid tax on only 4 lakhs. So calculate tax on that 4 lakh also. So what are you going to do? Total income. What are you going to do? Total income of which previous year? Previous year 16-17. Now it will be including or excluding? Excluding those arrears. So tell me, how much was the total income? 4 lakhs. On that 4 lakhs, how much was the tax? 2 lakh 50, no tax, nil. Hello sir. 2 lakh 50, nil. And 2 lakh 50 to 4 lakh, how much? 1 lakh 50. On that, calculate 10%, 10%. 2 lakh 50 to 4 lakh. On that 1 lakh 50, we are supposed to calculate 10%. Rate of 16-17 has to be applied. Yes or no? That will be 15,000. Now sir, the total income is less than 5 lakhs. Rebate will come, tight slap. Rebate and everything you are doing for this year. 25-26 you will get rebate. If in the 25-26 your total income was 5 lakh or less. Are you checking the total income of 25-26? Are you calculating the tax for 25-26 or 16-17? Are they telling you that in that year the rebate was also applicable? Don't take that rebate without they telling you to take that rebate. Getting my point? But if in this year, if in my previous year, if the total income was 5 lakh or less, then I am going to take the rebate. But I am not calculating the tax and total income for my previous year. I am calculating the tax for 16-17. I am checking the total income of 16-17. At that time, the rebate was not applicable. Getting my point? And if it would have been applicable, they would have definitely given in the question, just like they have told you about cess also. That cess rate was different in that year. Getting my point, everyone? Hello, sir. So tell me, on this 4 lakh, how much tax? Tax on, wait. This is the total income. And now I am calculating the tax on above. So how much is the tax on above? Tell me. Calculate. 15,000. Now pay attention. This is your tax 4. This is your tax 4. And this is your tax 3. Okay. Now tell me, if you would have paid this much tax in that year and not this much, how much extra tax you would have paid in that year? 41,500. This is your difference 2. 51,500. How did you get it? Tax 3 minus tax 4. Meaning, if your arrears would have been taxed in that year only, then in that year, excess tax, how much you would have paid? But since your arrears are getting taxed in this year, excess tax, how much you are paying? Are you paying more excess tax in this year as compared to 16-17? You are eligible to get the relief. Now you are supposed to check what? If difference 1 is higher than, greater than difference 2. What was the difference 1? 72,800. This year you are paying extra tax of 72,800 because the arrears is getting taxable in this year. How much extra tax you would have paid in 16-17 if the arrears would have got taxed in that year? You would have paid extra tax of 51,500. So you are going to tell your assessing officer, that see assessing officer, extra tax this year I have to pay how much? 72,800 because my arrears is getting taxable in this year. If my arrears would have got taxable in that year only, in 16-17 only, extra tax I would have paid in that year, but that extra tax would have been only 51,500. As compared to that, higher amount I am paying in this year. Please give me some relief. Will you get any relief? Yes. If this equation is satisfied, what did I say? If this equation is satisfied, 100% you are going to get relief. Relief under section 89 will be available. How much relief you are going to get? Relief will be difference 1 minus difference 2 will be how much? 21,000. This will be the amount of relief which you are going to get in this year. So this year, how much tax you are supposed to actually pay? Arrears getting taxable in this year, so your total income for this year is 11 lakh. And this year you are supposed to pay how much tax? 1,48,200. Because your arrears are getting taxable in this year. Because of that, 8 lakh? No, 11 lakh is getting taxable in this year. Yes or no? And as a result of that, you are going to pay this much tax. But out of this tax, take a relief. Out of this tax, take a relief. Relief of how much? So therefore, final tax. What did I say? Final tax for previous year. 25, 26 will be 1,48,200, 1,48,000, 200 minus 21,300. How much will be the final tax? 1,26,900. So they are telling you don't pay this much tax. They are telling you don't pay this much tax. Pay only 1,26,900. Now calculate the difference between this amount and this amount. This will be 51,500, exactly the same amount. Understanding? So we are going to take extra tax from you, but that extra tax cannot be more than the extra tax which you would have paid earlier. Understanding? This is the concept of relief. Okay, now pay attention. Here, what is this here? What is the total income for this year? Any one total income, any amount. For example, the total income for this year is 10 lakhs. Okay. This is computed without any arrears and all. Now, previous year 16-17, previous year 17-18, and previous year 18-19. 1, 2 and 3 years. Salary was in arrears. In my example, I took only 1 year's arrears. In my example, I took only 1 year arrears. Which year? 16-17. But this time they are telling you 3 years salary which was in arrears you are receiving in this year. So what are you going to do? See, salary for this year was 2 lakhs. Salary for this year was 1,80,000. Salary for this year was 1,20,000. So total arrears how much? 5 lakhs. Yes or no? Now that entire 5 lakh received in previous year 25, 26. Possible, not possible? Tell me. Now they are telling you to calculate the tax liability, including arrears and everything. How will you do it? Simple. Simple. First you are going to calculate the total income of 25, 26, including what? Arrears. So what is your total income? 10 lakh. In that you will add arrears, because arrears are also getting taxable in this year. So actually your total income taxable will not be 10 lakh. Actually it will be 15 lakhs. That 15 lakh includes arrears of last 3 years. Yes or no? So your total income will be 15 lakhs. Wait, guys. So will you calculate tax on this amount? This will be your tax 1. This will be your. Now what are you going to do? Total income of 25, 26. Take excluding arrears. Excluding arrears it was 10 lakhs. On that 10 lakh you will again calculate tax. This is your tax 2. Now difference. This is your difference 1. How will you calculate? Tax 1 minus tax 2. Everyone. Now you have to compare this difference with the difference of earlier year. Now earlier year is not 1 year. 16-17 also, 17-18 also, 18-19 also. Now they are telling you in the year 17-18, 16-17, 17-18, 18-19, this was the arrears. This was the, and in this year the total income actually assessed was 3 lakhs. No, sorry, this is 5 lakhs. This is 9 lakhs. This is 11 lakhs. Possible, not possible? Tell me. So in every year, what was the total income actually assessed? It was 5 lakh, 9 lakh and 11 lakh. What if the arrears would have been taxed in those years? Then the amount would have been 7 lakhs, 10 lakh 80 and 12 lakh 20. So first you will calculate on 7 lakh. Then you will calculate on 5 lakh. Difference of those two taxes. Then you will calculate for 10 lakh 80 and you will calculate on 9 lakh. Difference of those two taxes also. Difference 3. Then you will calculate for next year 12 lakh 20 and then you will calculate on 11 lakh. Difference of those two taxes. Difference 4. Difference 2. Difference 3. Difference 4. How will you get it? Tax 3, tax 4. Tax 5, tax 6. Tax 7, tax 8. Difference 2, difference 3, difference 4. All the differences taken together should be less than your difference 1. Only then you are eligible to get the relief. And the same concept which I have just now explained is there in your question number 25. But cherry on the cake. In the year 1617, you were not a senior citizen. 17, 18, 18, 19, you are a senior citizen. You will apply the senior citizen rates. Getting my point? In the year 1617 and 1718, cess was only 3%. And from 1819, the cess rate has been changed to 4%. How will you do it? After the break, we are going to solve that question and we'll end the chapter. Okay? So take a break. How much? 30 minutes. 30 minutes, huh? 30 minutes. After 30 minutes, we are meeting.